why don't you tell the folks why Holder would make these kind of speeches? Hey, we can't. They're too big to fail. We're not going to go after them.
Well, listen, it's kind of funny. They do go after them. Like, they're going after in different ways. They're like, killing J.P. Morgan and Jamie Dimon, death by 1,000 cuts, because he had the audacity to speak up against Obama. What they didn't do, though, and it's for kind of fairly unrelated stuff to the financial crisis. I mean, some of it is, but most of it's not. What the feds have not done is essentially hold anybody accountable for what went down in 2008. And, in the context of that, they're now, bringing cases. I talk about how they launched this massive insider trading investigation
right.
As a way to sort of appease, and that's what my book's about, to appease the public of that, they're cracking down on Wall Street. And, but I will tell you this, there are, real crimes of insider trading. You do have to ask yourself why they're spending so much time on that and not the stuff that brought down the system. And I think the reason why is because they really didn't know how to go about catching the bad guys, that caused the mortgage bubble. And that's basically it. And insider trading stuff is easier.
Yeah, you're right, because I always said the reason why they didn't go after the big guys is because you take the attorneys at the AG office, most of these guys are career. They just don't have they can't lawyer up against these guys on Wall Street. I mean, J.P. Morgan and Goldman Sachs, I mean, imagine how they could lawyer up. How these guys can't compete with that. They don't have the talent.
It's hard.
Yeah.
And, I don't think J.P. Morgan was at the heart of the financial crisis. As a matter of fact, they weren't. So that's what's interesting. Why are they going after them with such, vigor right now, such intensity?
Mm-hmm.
And the only thing I could conclude is that, this is an administration that, picks its targets. And, Standard & Poor's said it yesterday, or it's in the papers today, but they issued their response to the lawsuit that the federal government filed against them for putting out faulty ratings on bond issues involving mortgages. They said, why are we being singled out? We're being singled out as retaliation because we had the audacity to downgrade the country's AAA bond rating. So, that I think there is something to that. I'm not saying the S&P did the right thing totally, which they didn't. I wrote a book about how sleazy they were.
Right.
But they were all kind of sleazy. It was all like a rigged system. It was all where you had incentives, misplaced incentives. Remember, S&P gets paid when they rate a deal, not when they don't rate a deal. And that's the incentive to rate something, is the incentive for have a banker bring it to you so you can rate it. And bankers are not going to bring it to you if you're going to give it a low rating, right? And remember, they put AAAs on all those housing bonds that obviously were not AAA. They made a lot of money from that. That's inexcusable behavior. However, we should also point out that they weren't alone in this. Far from it.
Yeah, and Barney Frank never put it in the Frank Dodd bill either, did they? Or did anything with Fannie and Freddie?
Oh yeah, I mean, Fannie and Freddie gets away scot free.
Yeah.
I mean, listen, if you're gonna like give me the top 5, culprits of the financial crisis,
Congress.
Okay, maybe the rating agencies are up there, but so is Fannie and Freddie.
Yeah, absolutely, and Congress, right? Everybody. I remember when they first came out there, they went after the mortgage brokers. Ask the mortgage brokers. We got to put them in jail. Instead, wait a minute, it's Congress. Like Congress was getting off the hook on that whole deal, right?
Well, the mortgage brokers did do some bad stuff. I mean, these are guys that falsified loans. It's interesting though that because I mean, here's why it was such a bubble, and maybe this was a difficult thing. They couldn't bring cases. It's hard to bring cases of irrational exuberance. It's hard to say, this is you go to jail because you had this stupid belief that things keep going up and they never go down.
Right.
And there's some of that in here. You have to remember one of the reasons why the banks didn't accepted most of those loan applications from the mortgage brokers and never really took the time to investigate whether the applications were right is because they had so much money on their hands. We had low interest rates. They were flush with cash. They had to give the money out, And so when you have that environment, it does breed a degree of legal corruption. Okay, but clearly there was a lot of corruption. One of the things I think that Wall Street did poorly is disclose its problems when they knew it was bad. I mean, when I was at CNBC, I was reporting in 2007 because I was listening to pretty smart analysts like Dick Beauvais that Bear Stearns was probably in trouble. Okay, and that they were eating their own cooking, meaning they were essentially holding on to bonds. And this is what Dick was telling me, Dick Beauvais. And I remember saying to Dick Beauvais, he's an analyst, I said, "Are you sure that they?" Remember, Bear Stearns had a hedge fund that blew up and that started the credit crisis. And I said, well, that's different than the firm's own balance sheet. Bear's telling me that they don't have this stuff, and he goes, they do, Charlie, they do.
Wow.
I said, well, if they do, then they're not going to last very long. He goes, Charlie, they do. And he was right. I was surprised. There was a guy named Jesse Eisinger. He wrote for Portfolio. It's a defunct magazine now. He's at the Times and a couple other places. He also wrote about this stuff in 2007 before it really started blowing up. And I had like an argument with him on the air because I didn't believe it either. But the thing that you could say about the Wall Street firms, I mean, Jesse was getting it from his sources. I'm sure they
Charlie,
were short sellers.
we're going into a hard break right here, and we'll come back with Charlie Gasparino. You've got to get his book, Circle of Friends. You see Charlie every Saturday on Fox. He's the one that keeps the action going. We'll be right back with Charlie Gasparino. Now, Charlie Gasparino, I got to say this about Charlie. I've known him for years. There is no reporter that writes like he does, goes after the story. You can see him on Fox Business. You can see him on Saturday. He's a joy to watch on Saturday because it wasn't for him. It'd be like watching paint dry. He keeps the thing going. But there's nobody that can report.
I'm sure Neil would love that.
Yeah, right. But nobody reports like. I'm not just saying this. I know he have, and that was involved a little bit with that first book, Blood on the Street. You've got to, because we only got 3 minutes left. I want to make sure they read your book, Charlie, because you are good. And guys, you know this. How many people I have on do I push books? Maybe 3 a year. That's it. And I hardly do it. You got it. So look, with 3 minutes left, less than 3 minutes. Circle of Friends. Why don't you tell the folks when they finish this book, what do they come away with? Why do you want them to read this book?
Well, it's a crime story, so I think it's interesting.
Mm-hmm.
It's a white collar crime story. And I want people to understand how Wall Street works, and this gives you a good idea on how these big players trade and break the law, and why the government went after them with such intensity, and the political motives behind the government. It's not all dollars and cents, and it's not all right versus wrong. A lot of this is politics, and I get into this. This is both a crime story and a political story, and I think those are the sort of best things to read. And by the way, it's a quick read.
Yeah, and the one thing, what happened, fill us in quickly, we got like a minute and a half. Going back to Congress with their inside trading, they started with it. They started to calm it down. Then they went back and they changed the law.
I don't know what they did something.
So they can inside trade again.
That's not insider trading with the Congress. Let's be clear here. What the allegations were that some congressmen would trade stocks, particularly during a financial crisis, right before certain key votes that would move the markets. That sounds like insider trading, but I'm telling you, it's not insider trading. Insider trading, and this is where it gets technical, is me as a corporate insider, like say I'm the CEO of a company. I know the earnings are going to be lousy, and I sell all my stock. Right. That's classic insider trading. The other part of insider trading is known as misappropriation. It's called the misappropriation theory, where me, as not an insider of the company, but I somehow, through some bribe or shared benefit, entice somebody to give me inside information about the company that he works at, and then I trade on it and I make money.
Who's the worst? Who's the most blatant? With 30 seconds left, who's the most blatant in your book, do you think? I'm not going to tell you what I think. I'll tell you what the government thinks. Yeah. The most successful hedge fund over the last 20 years, the government believes, as SAC Capital, is the most blatant insider trading mecca. Now, they deny it. SAC denies it. It's a big hedge fund. It's run by a multi-billionaire, Steve Cohen. Yeah. They deny it, but the government has indicted them and indicted, several key players there. All right, gang, listen, we have 10 seconds left. We got to get Charlie back. Circle of Friends. And again, he has some other great books, Blood on the Street, King of the Club. Please get this book. This book's terrific. Charlie, thank you.